Good afternoon, everybody, and welcome to Midday Market Action. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Glad to have you here. Glad to be here in a wacky-wackyiosity kind of day. Today, big news. Disney got Iger back. Is that going to be a big mover for Disney? I think that's going to be the 6 p.m. video today. Joy and I discussed it. So don't make sure that you don't miss that. I'll give you my insights, but of course, I'll tell you what VectorVest thinks about the stock as well. I think that it's been a solid company for a long time. It's had some headwinds, and I'm wondering if the rehiring of Iger as the CEO will push the stock's price higher. Is this the new fairy tale for Disney? All right. If you're brand new to the channel, don't forget to hit the subscribe button. Thank you all for being here. By the way, if you can hear me, let me know in the chat. Let me know that I'm coming across loud and clear. Put VV Nation up in there. I'm glad to always see that we have a global reach. Eton is here from Israel. Bruce is here from Coastal Carolina. We were just there last week in Tybee Beach. Joey's been there.
Tybee Island.
Tybee Island. That's what I said. You weren't listening. You thought I said Tybee Beach. No, that's what you thought I said. I said Tybee Island. You're wrong. You're always wrong. When it comes to me, you're always wrong. I'm always right. So with that being said, say hi to my producer, Joey. He's a good friend of mine. And we argue like this all the time. We just never fought. If we fought, though, it'd be bad for Joey. It would be so bad for Joey.
You'd walk over, but you'd...
No, whatever. I knew you were going to say that. You learned that from Dave. Because Dave says that all the time. You walk over, but you'll limp back. I don't think so. I so don't think so. All right, with that being said, there's a lot of things going on in the market. We're going to talk about what's moving the market. We've got some news, but on Mondays, we do dive a little deeper into market timing. As you can see, all of the major indices are down today. I'm wondering, the alert was, I'm wondering if the relief rally is done. And all of these relief rallies have definitely been on hopeosity. That we can push the market higher because we need to push the market higher. And we got to show the Fed that he can stop raising interest rates. The Fed's going to do what the Fed's going to do. And all of these rallies are opportunities for you to make money short term. All right, I'm going to put that out there. All of these rallies that we have had are all about making money short term. Long term picture still shows that inflation is still high. Yes. Is it getting better? Yes. Has it peaked? But the Fed is still going to aggressively keep raising interest rates. I'm not going to ask the question today about if you think that he is or not, because I think the overall the overall idea is that he's going to have to. And a lot of people out there says he can't, because when it comes time to pay back our debt, we can't be paying it at these higher interest rates. I still think that to a certain degree we can, and we're going to screw ourselves even more because we're going to print money to pay back on the debt, and that's no good for the economy either. So, but if the Fed pauses right now or starts to lower, instead of raising 75 basis points, only raises 50 basis points, the market takes off, but inflation is still not fixed. And the terminal rate is going to be higher than what he anticipated. I look at the terminal rate for interest rates is going to be somewhere between 5 and 7%. That's what I think. So now that's what I think. It all depends on what the Fed does, because we can't fight the Fed. We just can't fight the Fed. The Fed's going to do what the Fed's going to do, no matter what retail investors like ourselves think we want to do. So now I look at the amount of people that are here. I want you guys to do me a favor. Everybody out there, take a moment right now. Share this live link on your social circles. Let other people know what's going on so that they can come in and get a piece of this action right here, because this is some good action. At least the government can print. I can't print my mortgage payments, says Fireblazer. Absolutely, you cannot. All right, because we have to be more fiscally responsible. The Fed doesn't have to be, because they got a printing press. Something. Fireblazer, I don't want to have a printing press. So I don't want to put myself in the situation that the market or that the Fed has all of us in right now. So that's my opinion in regards to that. I'm not trying to do that. Ramon says, sure you can. No, I got a printing press as long as I print Joey's money. If I had Joey's money, I'd burn all mine. If I had Joey's money, Joey just was on vacation and he was eating good and all that kind of stuff. If I had Joey's money, man, the Fed also sounds like my spouse says Fireblazer. Nah, my wife may spend money, but we're blessed in that, we can. So that's a good thing. All right, that's a good thing. All right, with all that being said, let's take a look into what's going on in the market right now. And like I said, on Mondays, we will spend a little bit more time from a market timing perspective to see what's really going on. What are our market timing signals saying? What is the guidance that VectorVest is giving to people who are subscribers? And by the way, if you're not a subscriber to the VectorVest software, we do have a Black Friday special. It's a video that is on our YouTube channel, 99 cents. Go check it out. This could be a good opportunity for you to take advantage of what I think is the best software out there by far to help you guys make money and make better decisions in the market. Which industry is on the go? Francisco, we're going to find out. All right. I'm going to tell you, I do that on Mondays and I also do that on Thursdays. I show you what the fastest industries are. So I got you. I got you on that. Here's the intraday market. Big gap down this morning. Here's my level of the gap if the market's going to have legs to the upside. But look at the continued push to the downside. We just came off of session lows right here. Market looks like it's trying to do a rebound, but solid level of support actually now goes down to the value of about $55 on the VectorVest composite after the big drop in the market this morning. So as we continue to look through this, this is intraday what's happening. More of a bearish feel today. Let's go look at the longer term. Here's the 3-month graph of the VectorVest composite. Here's the relief rally that we've been in, up and down, but a solid level of a trend line connecting the lows here. Today's activity, red candle. Watch the 3 and the 8 on the market end of day. It's converging down. We're getting close to possibly the end of this relief rally. We do have this level of support. If it breaks down below that, we definitely have more legs to the downside coming into the Santa rally, though. So we haven't gotten there yet, but Black Friday starts this Friday, which is really the kickoff of the holiday season. Looking at retail is interesting because the retail industry is moving, but a lot of companies in the retail space have been guiding lower to a softer Christmas this year. So we'll have to see how that pans out. I still say that I'm not sure how I quite feel about the retail space, but generally, historically during this time, retail kicks off in anticipation of Christmas. But with high inflation, with the recession, with all of those things, we may have a different feel when it comes down to retail this year. But as I'm looking end of day, today's activity, the 3 and the 8s are converging very quickly. And even if they do cross, we do have this trend still in place. We'll see if this upward relief rally has finally fizzled out. And then thirdly, let's go look at the story between interest and inflation. CPI, here's inflation. I just did a video a couple of days ago talking about if inflation has definitely peaked. It looks like it has. So what the Fed is doing with the interest rates is affecting inflation. But man, look at this slow pullback. Look at this slow pullback on inflation. And a lot of people out there saying, yeah, it's good to go. We got to go. But you don't want to break the economy. And I still think that the Fed, here's the notes. This is what we're looking at is interest rates rising. And we were chasing it up as inflation was running up. But finally, as we are still raising interest rates, we're pulling back a little bit. But is this fixed? And the answer to that question, I think everybody can say out there, is that it's not fixed yet. Made good money with Steve in the Jockey Club this morning, shorting a firm and playing SQQQ easy money today. Way to go. Steve is awesome on the Jockey Club. Hey, what are some books about stock I could buy? What do you recommend? You know something, cool boy? I'm going to do some research and I'm going to come up with some books. That's a good question. I'm going to come up with some books that I have read, books that I think that you might want to read about the stock market. One of the best books, I got to bring that out. One of the best books is right here at VectorVest called, it's green. Dang it, Joey. Stock Strategies and Common Sense, written by our founder, Dr. Bartolito. It's probably one of the best books ever written about the stock market. As a subscriber, you have access to a free ebook on this that you can print. If you're not a subscriber, you still might want to think about becoming a subscriber. For 99 cents for 30 days is an awesome deal to take advantage of. And Joey did put the link in there. So, cool boy, I think that I will do some homework for you, and I will come up with a list of books that I think you guys might want to take a look at. Name, please. Stock Strategies and Common Sense, Enmar. All right. Stocks, Strategies, and Common Sense. That's the name of the book. Stocks, Strategies, and Common Sense. And again, as a VectorVest subscriber, if you go to the Welcome tab, here is download. You can download the book for free. Stock Strategies and Common Sense, you can do that. So a lot of people out there don't know that as a subscriber, you have access to the book as an ebook. All right, but it is right here on the Welcome tab to click on it and download it. All right, let's go back to the graphs. Now, another thing in regards from a market timing perspective is, what is the engine that pushes a market higher? It's earnings. And here's our earnings trend indicator on the market climate graph. Earnings are falling. Why? Because with the rising interest rates, people are having a harder time making the black line in the black. I put the bottom line in the black. Because as rising interest rates, as a part of doing business, you borrow money to grow your business for research and development, for a lot of different things. With the rising interest rates, people are having a hard time keeping the bottom line in the black. So what do you see happening? A lot of layoffs. If you follow me on Twitter, every day I share or tweet out the companies that are laying off people. If you want to see that listing or see that, go to @GlennTompkins Jr. On Twitter. And every day, it seems like more and more companies are going the path of laying off people. But it's interesting, and we're going to talk about that as a story today. So before we get into all of the stories, I wanted to give you a nice overview of what's going on in the market. And from a market timing perspective, our confirmed call is the slowest, most conservative call. We were getting close to getting a confirmed up call. Guess what? It never happened. So we're still in a confirmed down call, and we have been since 8/26 of 2022. Even with all of this nice run up, we still never got a confirmed up call. So that is for the people who are the longer term investors. For those of you who are a little bit more swing trader, let's go to the DEW. We did get an up call on that on 10/25/2022. We're still in that up call right now as the market's pulling back. I've got the daily color guard this week, so make sure you tune in to the guidance that we give as a daily color guard report, and I will keep my eye on that. And then the last one is the primary wave, the fastest call we have. We just got another down call. That was a couple of days ago on 11/17. So the only call that's up in our market timing right now is just the DEW. The confirmed down is still called. The primary is still down. The primary wave is still down. It's only the DEW. And with today's action, we might be going to a down call. We have a confirmed up call in Canada, but I'm still poor. You got to be careful. See, now there's a difference between the Canadian stocks and the American stocks. One, the American stocks, we track a lot more of American stocks. And on the Canadian side, it's more resource rich. So you're looking at oil, you're looking at gold. It's a different kind of market in regards to the American market. But the market timing calls work just the same. But the Canadian market is more resource rich. So those calls are being really based off of those resource stocks. All right. So just keep that in mind. So my spouse says, I have no common sense. That's why we cannot make money. Well, you show her different. You show her different, Fireblazer. What's happening in the lithium space? I still like lithium, especially because of the EVs. But you know what I like about the EV space right now? There's a lot more talk about hybrids. And that I feel is more acceptable to people rather than just going out to buy the EVs. How many of you agree with that? I'm liking that Toyota, type of one in the room if you feel that the hybrids are more appealing than the EVs. Type of two if you think the EVs are more appealing on their own. But I like the idea of the hybrids, and that still keeps it so that fossil fuels are being used as well as the integration of EVs. I do like more and more companies are starting to talk about hybrid, folks. And I think that is a great way. And that is a plan. In my opinion, that is a plan to get us to the all EV side rather than trying to push the American people to straight EV. I think the hybrids are the way to go. And I'm really liking, I'm going to give them a hand clap. I'm really liking that more and more companies are going to at least get into more of the hybrid space rather than just the EV space. Sing 5 News says, no, he wants straight to go to EV, and it's okay. One, because hybrids are nice and they're good for both energies. I agree. Well, does hybrid sacrifice performance? You know something? No, I think not. I think that a hybrid probably is more fuel efficient than a straight up combustion engine. I think that I honestly think it's more fuel efficient than a straight up combustion engine. All right, now let's start to get into some of the news stories that I got for you today. Where the hell are they? There they are. And let's go here. So starts off, the Fed's aggressive rate hikes are a game changer. So interesting, looking at all of the Fed hikes over the years and what they've done, this has been the steepest rate hike that has happened. Everybody see that? Type of one, if you see that. Type of two, you just think that this is garbage. I think that's why a lot of people are stating that the Fed is raising too fast. It's hurting the economy. We're in a different economy than we have been in all of these other years. What's the biggest part of it? Is the debt. Right? That's the biggest part of all of this is the debt. And the raising of the rates, because the market's been running for a while, since at least, we call it the Trump rally, since 2016. That's 5 years the market's been running hot. With all the hotnosity going on, that's another Glennism. With all the hotnosity, and that's a funny one. With all of the hotnosity that's been going on, the market's running hot, the Fed calling it transitory, that inflation was in bounds. Now they're paying the price for being too slow to the game. They're paying the price. And that's why they're raising the rates as fast as they are. And that's why they're going to keep raising the rates, because they've got to stem the tide of inflation. 40-year highs is nothing to sneeze at, folks. All right. And that's, so I think that this was a good visual picture to see what the Fed is doing with interest rates as compared to other times. Here's the 2000. Here's 2004 to 2006. Here's 2016 was, look at that, nice run. 2004, really hot run, but the Fed never really raised the rates. This is the raising the rates as steeply as they've done right now. So the tide is going out. The tide is high and I'm moving on. I want to be your number one. How many of y'all remember that song? That was a way long time ago. All right. So with that, let's go to my next story. The Federal Reserve minutes are coming out this week. Surveys on business activity to provide details on global economy's health. All right. So we look at the first story, showed the big jump, the massive jump in interest rates, fast and furious. The Fed Reserve minutes and I think that the Fed understands that the rising of the interest rates is a lag, but even with the lag, they're still running. Fed can raise rates all they want. It's the spending they got to stop. That's the other side of it that nobody talks about. So it's interesting. Patrick and I have talked about it on Afternoon Market Action, that the spending is not stopped. They are still raising the rates. And it's like saying, hey, I want you to do this, but I don't want you to do this. So they're putting themselves in their own situation. We'll see what happens. So we're going to see what the Fed minutes say later on. Everybody's talking about crude. Why is crude going down? It's because the demand with China is going down. COVID cases rise, and the China is like, yo, I don't know. And they are the biggest importer of oil in the world. Why? Because they got so many people. They got so many people. So when the demand stops with them, it affects the global oil prices. And if the demand is low, oil is going to fall. I still think that we're getting into colder months. I think that even with China's COVID cases, as it gets colder, they're going to still need to get oil. I still think that oil is a good play. You hear me say that. I sound like a broken record in regards to that, but it just makes sense on paper. All right. It just makes sense on paper. All right. My next story, when we talk about crude oil going down, is the dollar is rebounding. It's China's COVID worries. The dollars, now that hurts us. All right. Because now when people want to buy our goods, they got to buy it at a higher price. Not only that, it hurts precious metals. A lot of you who were thinking it's time to get into gold, I still haven't been on board with saying it's okay to get into gold, not until the dollar starts to weaken. Then when that happens, gold will take off, but not until then. Now, when we talk about the dollar, we talk about oil. How about the news story that came out today? Disney shares rise after Iger replaces Chapek as CEO. And this tonight's video is going to be somewhere along the line is the magic back at Disney? All right, how many of you think that this is a positive sign for Disney? Type of 1 in the room. All right, big story. If you think that Disney's just going to keep on the way that it is, type of 2. But type of 1 if you think that this is a good thing for Disney. I'm not going to give you my opinion yet until I do tonight's video. All right, then you'll get a feel of what I think and then what VectorVest thinks about the stock as well. So it's a mixture. Hey, Joey, put up a poll. All right, I want everybody to answer. Put up a poll. Do you think the change in management in Disney is positive? Yes or no? You got that, Joey? Joey! Are you listening to me?
Do you think the CEO change is positive?
Yes. Yes. Why are you so slow?
I was already doing it.
No, I don't think you were doing it. You're just being slow.
It's already there. I can't type and unmute at the same time.
Yeah, you can. All right. So there you go. I want everybody to answer there. I want everybody to answer the poll there. So I can see the numbers in the room, but I want you to answer the poll. All right. Let me know what you think. All right. So with Disney, there's another side of this, though. I looked at Disney's prices. Disney visits will cost more in Florida. There's inflation in the Magic Kingdom. So I scrolled down. Single day tickets to Disney, the Animal Kingdom, from $109 to $159, ages 10 and up. Single day to Epcot, increasing from $114 to $179 a person. Single day tickets to Hollywood Studios, going from $124 to $179. Single day tickets to Magic Kingdom Park, the most visited theme park, are going, from $124 to $189. The $189 price ticket is specifically during the peak holiday season around Christmas and New Year's and not all year, the Disney spokesman said. Folks, that's a big jump in prices to go to Disney. All right? So and there you go. Rimor is right. That's expensive for a family of 4. I'm still waiting for the grandkids to get of age so that they can really, truly appreciate Disney. But the longer I'm waiting, the more these prices are going to go up. Almost, I'm going to round up almost $200 a person. I think it was $50 when I was last there, says John. These prices are no joke. But I quit going to Disneyland when tickets went to $30, says Roger. Better to sit at the beach and make sandcastles. And Alton says he was doing a good job. The old CEO or the new CEO, Alton? The old CEO or the new CEO? But Glenn, most people buy multi-day passes. And that's a lot of money. All right, I'll stick with the 40-year-old Disney movies. All right, that's big. So now it led me to another story. How are you paying for this? As savings slowly sink, consumer spending is on what? Borrowed time. And the money, Ramar says the old CEO is doing a good job. You know something? The interesting thing about that, and again, when I do this video tonight, I'm going to look at both sides. Was he doing fine, or were the investors scared that he wasn't doing enough? And I think that that's going to be the crux of the story. I think that's going to be the crux of the story. Glenn can afford season passes for his grandkids. Missing. No, they don't need to go for a whole season. All right, so interesting. Credit cards. This brings into the story of credit cards. More and more people, because of, it's interesting how COVID affected everyone so adversely to they are willing to spend this kind of money to travel and to get out of the house. And they're willing to put it on their credit cards, and consumer debt is going up exponentially by way of spending money on the credit cards. Yes, woke is, and that was a big social issue. That was a big social issue, and I'm with you. I don't want to get political, but that was a big social issue that affected the current CEO. All right, so I just got to say that was big. That was big. All right, and last but not least, let me give you some stocks to take a look at. Cell tower REITs could climb 20%, and I'm going to point out 3 companies: American Tower, Crown Castle, and SBA Communications. With the advent of 5G pushing into 6G and all of these towers are going to need to be set up, in all of the major metropolises. And they're going to need to have the land to put it. And these 3 companies that we're going to look at could play a major role. Not could, they will play a major role in how these companies build these towers. So this is 3 companies that I want you to take a look at. But someone asked me about what was moving. Cell tower REITs. All right, cell tower REITs is an industry that can succumb or overcome inflation because these towers need to be built. All right, so I'm putting that out there as well. All right, now let's go to my listing of stocks. Let's go here. Let's go to the views tab, and let's look at the indices. All of the major indices are down today. All right, there's no ifs, ands, or buts about that. Today is a down day. I gave you a more in-depth view of what's going on from a market timing perspective, that out of our 3 major market timing calls, only one is in an up call right now, and that's the DEW, the middle of the road technical timing signal. But the primary wave is down and the confirmed calls are down. And the guidance, if I go back to the homepage real quick, the guidance is on point. Our guidance side, where's the guidance, Joey? Why did you take the guidance off? Hold on. Strategy. Put that up. That's not the one I want. Where is it? News, top items. Where's the guy? Oh, there it is. Oh, never mind. You didn't move it. It's right there. Man, how long have I been doing this? Here's the guidance. VectorVest does not advocate buying any stocks at this time. So the guidance is on point. If we look at our color guard back and forth with the green and the red and the yellow, the market is having a hard time making up its mind which direction it wants to go. But the guidance says we don't advocate you buying any stocks at this time. Let's go to the big news, what stories that are out there. And again, the story that I'm going to do for the 6 p.m. video is going to be on Disney. We talked about the dollar going up, so we're going to look at the UUP. We talked about oil under some selling pressure. And then we want to talk about the 3 companies in the REIT space for telecommunication, SBA. Let's go look at those first. All 3 of those are up today. Let's view the stock graph. Let's go put these on a 3-month graph. And, all of the major carriers are going to need to put their um, stuff out there, right? Let's put this on a 6-month graph. I do like the bounce off support on SBAC. Earnings per share is all over the place, but I like the bounce up. It's in a channel within a bigger channel. I'd like to see it break out of this level of 314.27, but it is above the 20-day exponential moving average. Same thing with CCI, also sitting in a channel, bouncing off the 20-day. The earnings per share on CCI looks much better, though. Definitely bottom left to top right. And then AMT, the earnings don't look so good here. So if I'm looking, in all three of them are above the 20-day exponential moving average. If I'm looking at the three, though, I'm looking at probably CCI, mainly because of its earnings per share. And then next would be SBAC. And then the last one would be AMT. So that's the three in a space that you wanted to know what's moving. Here's some stocks, and we're going to do a little deeper dive into that as well. Here's the dollar and oil and Disney. Let's go look at all three of those. The dollar, view the stock graph, put that on a 3-month. Dollar's pulling up. It's pulling up after it fell. The dollar's bouncing off of a level of support, moving up. I don't have both the 3 and the 8 on here. That's interesting. Now I have the 3 and the 8. No, I don't want that. I had it right the first time. Looking at the 20. Take off the 3 and the 8. It's below the 20 exponential moving average, but bouncing up. Keep your eyes on it. All right, that's on the dollar. And here's on oil. Oil, for the most part, has been in a little bit of a channel too. Look at the falling oil, and a lot of people are dumping it. But look at the open candles, which means the prices are higher than the opens, which is a bullish sign. All right. Rising volume, even though it's negative, it's still a rising volume. A lot more people are looking into this. All right. I'm not ready to look at individual stocks yet. Seeing 5 news. So we'll keep, I will see if I have an opportunity to do that. Earnings this week, it was just a lot of stocks. I wanted to spend more time on other stuff. Fastest industries. So you wanted to know what industries are on the rise. Let's go to my search, Delta search. Industries. Let's go see what industries are on the rise. Let's go see what's on the rise. I knew that name sounded familiar. I worked under Eisner and Iger in 1999. There you go. All right. Big move on retail mail order. The 7-day change or delta on RT was at 29%. And now over the last 10 days, up 45. That's big. Let's view the stocks in there. And because not everyone is a VectorVest subscriber, I only limit this to the top 5. And let's go take a look. What do you see here? Nothing is looking at this as an industry that's moving. Nothing is fundamentally sound, really. All right, so these are all, even though it's on the rise, these are stocks that are more speculative plays. Let's go see if we can find something that's got. Here's office equipment. Let's run this again. Here's office equipment. I want to see a big move. Like, yeah, here we go. Look at that. Office equipment. Only 9% change in RT 10 days ago. And over the last 10 days, up 40%. Now, let's go see if we can find some stocks in here. Let's look at the top 5 again. All right, it's only 5 in here. Still, I've got 2 stocks in here that have a relative value above 1. So they have good upside potential. The safeties are not there. The earnings are all almost all positive. Oh, let's go look at the graphs of these, though. Let's go look at the graphs. Put these on a 3-month graph. I do like PBI, but look how overvalued it is. Look how and look at the earnings per share. So it's an industry that's on the rise. When I look at the industry, individual stocks, Canon, earnings per share down over the last 3 months. It is above the 20-day exponential moving average and below value, but I'm not feeling that. I'm not feeling that because of the volume, because of the earnings. I'm not feeling that. Man, industries that are rising, but I'm not finding stocks that I like for you guys. Let's go to the semiconductor. Semiconductor space is on the rise. All right, semiconductor space is on the rise. 14% 10 days ago, and now 38% over the last 10 days. Let's view the stocks in the industry group. Trying to find you something that's not only an industry that's rising, but stocks within the industry that look halfway decent. Ah, there we go. Now, these stocks all are fundamentally sound. Buy recommendations, positive earnings growth rate. Own STM, AVGO, AMKR. I'm liking these much better. Liking these much better for you. Now, love the earnings per share on RMBS, overvalued, leveling out, but above the 20-day exponential moving average. Keep in mind, all of these are fundamentally sound. AMKR, not feeling the earnings per share. I do like that it's above the 20-day exponential moving average, but starting to pull back right now. Next one. Own, undervalued. Earnings per share has fallen, but still higher than it was 3 months ago, above a 20-day. I need to see it get above that level of resistance of 77.03. STM, love the earnings per share. It is undervalued, sitting all of these stocks with the wackadiosity of the market. A lot of these stocks are sitting in channels. Same thing with AVGO, undervalued, above the 20-day, rising earnings per share. So if I'm looking at these stocks in a space that's moving, and I do like the move on the space, all right, for those who are looking what's on the rise, I do like the move on the space, but I look at the individual stocks and see which ones best appeal to me. Was that useful? Who asked me about what industries are moving? Type a 1 in the room if that was useful to you. Type a 1 in the room if that was useful to you. Type a 2 if you didn't want to hear jackbone diddly about that. But I like the idea of being able to use the power and the flexibility of the VectorVest software to answer the question of what's on the move, what's on the rise, so that you guys have an understanding of what's out there. All right. What channel, Glenn? TSN, CNBC? These ain't off of no channel. You getting this live and direct from VectorVest. These ain't no channels. This ain't no channels out here. No. This is all from the G Lizzo right here. You know what I'm saying? Yeah, baby. All right, let's go back to the viewers. What else? Industry, ETFs. Where's the money going today? They're all moving just in the wrong direction. Though a lot of those stocks, Roger, do look like they have some upside ability, right? Let's go look at the percent price change. Natural gas is on the rise today. Consumer staples, utilities, industrial, financial, healthcare, and materials are all in the positive today. What's getting hurt the most? Uranium, of which I own. I actually own URA. I still think from an alternative energy perspective, uranium is a good way to go. Copper's under some selling pressure. There's gold, oil, the Qs. So you can definitely keep your eyes on what's moving and then what's not. Live lobster crab? No lobster crab. Speculative plays. You know, I always like to give you some plays for those of you who are a little bit more speculative. Notice that the fundamentals in these stocks are going to be poopy, but that's by design. All right, let's go take a look at these graphs. All right, put these on a 1-month graph since they are more speculative plays. PSO, greatly overvalued. Earnings per share is definitely rising. I like the move of the stock. It's begrudgingly going up, but nonetheless making money over the last month. Next one is ELF. Same thing with ELF. Begrudgingly going up. Earnings per share looks good. It is above value. So these are, stronger stocks. Thank you for that. 77% says that the CEO change is positive, and only 23% said no. All right, so we'll see. Again, don't miss out on tonight's video at 6 p.m. Luck and Coffee, earnings per share is not it's not there, but definitely moving higher over the last month, not by a lot, but it is from a speculative play moving up. And IMCR, drug biomedical, moving up. Love the earnings per share. Notice that none of these are rock and rolling up, but in the current environment, that makes sense. They are also all moving up, all above the 20-day exponential moving average, though. What's going to be hot gift for Christmas and who makes it? I haven't the slightest idea. Maybe Cabbage Patch Kids come back. Maybe that's what it is. I think maybe Cabbage Patch Kids come back. Yes, Ramor Luckin is a Chinese company. Only 2 of them are up today. Today's big movers, stocks that moved up bigly today. Let's go see if they got the where. Remember, wow. So a lot of these gave back. Normally, this search that I use finds stocks that are up 10%. How about a lot of these stocks gave back their money? Let's click on these. So The reason why I even look at these stocks is because they made a big up move today. Do they have, look at that nice move on CFMS, and it's undervalued, and earnings per share. This might be a bad play. All right. It is a lower dollar stock bouncing off support, going above the 20-day exponential moving average. Earnings looks good. I'm writing that down. I like that stock. CFMS, big move today. I'm wondering if it was news, but I'm liking that. Luckin Coffee, currently a new outbreak in China, COVID. It will get hurt temporarily. Chinese made vaccines are not very effective. And Cody, I put out there that China is actually thinking about taking our vaccines. All right. They might be. Next one, big move up. Clearfield must have been news, but look at that give back. Earnings per share looks good. It's above the 20-day, but a lot of give back by the big wick at the top of the candle. PXMD was up and then turned back around and dropped back down. Be careful with that. Same thing with IC. Nicely jumped up. It is above the 20-day, but a down day. Earnings is about flat where it was a month ago. Wrap, nice big update today, but pulled back, a lot of selling pressure. I do like the earnings per share in that it's above the 20-day exponential moving average. All right, what else do I have? Biotech stocks. I always like to give out some biotech stocks that has some phase 3 analysis coming out with them. So let's go peep these out real quick. Put these on a 3-month graph. Above the 20-day exponential moving average. Earnings is a little lower than it was 3 months ago. A lot of flatness, but there is news out there on phase 3. AVXL, down day. The phase 3 is coming out for first quarter. Keep your eyes on this because of the news. Keep your eyes on this. I'm not going to tell you to go buy it now. I do like the rising earnings on a drug stock. That's not always seeable. All right, but it is falling, and it's falling hard on the end of day below the 20-day exponential moving average. Keep that on your radar, though. BCDA. Phase 3 catalyst coming out either this month or first quarter next year. Keeping very close to the 20-day exponential moving average. I love the big jump up in earnings per share, but the stock is clearly overvalued. MGDL earnings is falling. Again, keep this on your radar. Not a stock that I would say buy now. They have some phase 3 data coming out. Iger, same kind of scenario. Even though the stock's price is going down, I like this as a bullish divergence. Earnings per share is going up as the stock's price is going down. Couple that with the phase 3 analysis news. And same thing with ARDS, strong, steady earnings as the stock's price is going down. If the stocks don't look good now, then if nothing else, I'm going to tell you to put them all into a watch list. All right, I got some day trading picks. Did I give you any day trading picks today? Let's go see. Yeah, all of these are sells. With today's activity, all of these are to sell short. Put this on a 1-month graph. All of these stocks are to sell short. Energy, petroleum stock below the 20-day exponential moving average. I do like the earnings. It is undervalued, but with the way oil is right now, a lot of these are going to be petroleum. How about this? Transportation equipment manufacturing looks good, undervalued, but it's got some selling pressure. Something to keep on your radar. All right, I'm just going to go through the rest of these. That's the sell short. That's the sell short. All right, Wayfair. Yep. Keep your eyes on that. Affirm, big move. And I heard that the Jockey Club made some money on this morning. It was a good pick for selling short, as you can see. All of these are below the 20-day exponential moving average, and a lot of these have earnings that are falling. All right, folks, that's all I got for you today. All right, that's not all I got. Tell you what I'm going to do. We don't do this very often. I'm going to take 5 stocks. PCVX, I'm going to take 5 of your stocks to take a look at today. Going once. Going to you guys ain't got no stocks for me. I'm only looking at 5. Casinos, STLD, 2, AR, that's 4, HD, that's 4, Tesla, that makes 5. All right, here's your 5 stocks that I'm going to look at. I did want to look at SGML. All right, and I did want to look at Soxalone. All right, no more. All right, let's go peep these out. So these are your stock picks that you want me. No! Stop putting stocks in there. Was that creepy? No more stocks. Was that even creepier? It's probably creepier too. All right, let's go look at these. Let's go look at these on a 3-month graph. I do Steel Dynamics undervalued, above the 20-day, moving up. Watch earnings per share though, but I like the price action. And it's undervalued, hitting a new 3-month high. I like that play. Home Depot overvalued now, but still above the 20-day. Earnings per share is higher than it was 3 months, but pulling back a little bit. Not at 3-month highs, but definitely broke above a level of resistance and still moving up. Be careful with that one, though. AR Antoro, another petroleum stock, below the 20-day, broke through a level of support. I like the earnings per share. I don't think that this is the right time, even though it's undervalued and it's got the rising earnings. I don't think it's the right time, even longer term, below the 20-day and below a level of support. Same thing with SGML. I like it as a lithium play. I'm a lithium and uranium kind of guy, but right now is not the right time. Earnings per share looks beautiful, but the stock is below the 20-day exponential moving average, below a level of resistance, and I do love that it's undervalued. Don't think that this is the right time. PCVX. This is probably news-driven jump up. A lot of consolidation right here, still above the 20-day. I'd like to see it break above that high. Earnings per share is a little lower than it was 3 months ago, but starting to rise off of October. And the next stock is Tesla. I think that the whole Twitter thing has affected Tesla adversely. The company still makes money, but the selling of Tesla shares to fund for what's going on with Twitter, I'm not sure that the Tesla stockholders are happy. All right, stocks prices going down. I do like the rising earnings. It is overvalued. I'd wait for a better buying opportunity. If you're in it, though, you got to make up your mind. SOX L above the 20-day, going a little bit back and forth. It still is above the 20-day. If you own it long, leave it alone until it breaks below that 20-day. All right, Tesla is recalling 320,000 cars, too. Thank you, Roger. Didn't know that. Joey, put me on my last screen. Which one is it? This one, right? Yeah, I did. I didn't need your help. I need your little stinky help. All right, folks. We covered a lot of stuff today. Be out on the lookout for the 6 p.m. video today. And maybe I've got to look at both CEOs to see if the move to bring Iger back was warranted, or was it just a knee-jerk reaction? I could have been. Sold TSLQ too soon, says Ramor. I got you. Thank you for the stocks. You're welcome, Stephanie. I do a lot of stuff here, talk about what's going on in the market, but we also look at a lot of ideas for you guys to keep your eyes on. That's what it's all about. We do the work, you reap the rewards. With that, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Still praying for the people in Florida and Puerto Rico. Bom dia, salam, shalom, namaste, ya. So, until the next time, folks, see ya.